Good morning, everybody. This is Jack Gleason with MajorLeagueTrading.com. It is Wednesday, February 6, 2019, and this is a reminder to follow your rules and trade your plan. Welcome to the Major League Trading Morning Trade Plan. We'll begin by going over the economic reports that we've had here and are going to have. Last night, obviously, was the State of the Union address, and then at 7 a.m., NBA mortgage applications, 8:30 trade balance, union labor costs and goods trade balance. After the bell, crude oil inventories for anybody who's participating in the combine. Do not hold positions through that. At 1 p.m., we're going to have the 10-year note auction. And then at the start of the next session, guys, just to be aware of tonight, I believe, 6 p.m., Vice Chairman Quarles will be speaking, and then Jerome Powell will be speaking tonight. So in the after hours, we'll have some news events we need to be aware of as well. Chipotle, a couple earnings events: Chipotle, MET, NXPI, ORLY, PRU, all earnings events after the bell. Trend biases of the prior day for the four indexes: ES was bullish, Nasdaq was bullish, Dow bullish, and so was the Russell. On the overnight situation and time frame, neutral ES, Nasdaq, Dow, and Russell. Shorter term time frame, bullish in all four of the indexes: ES, Nasdaq, Dow, Russell. Midterm time frame, ES bullish, Nasdaq bullish, Dow bullish, Russell bullish. And on the longer term time frame, neutral ES, Nasdaq bullish, Dow neutral, Russell neutral. And I apologize if my internet is still sketchy. Apparently somebody moved the antenna, and apparently it's supposed to be fixed today, so hopefully by tomorrow we'll be all good. Moving on to the previous day's summary for the S&P 500. Bell to bell high of the prior day, 27.37.75, with the bell to bell low at 27.22 quarter. Summit was 27.31. Value area high 27.34 half. Value area low 27.28 quarter, with the point of control at 27.30. So really tight value area, like 6 points. European close 27.30 quarter. Volume was 1,197,000 contracts. Overnight high here was right at the open or just after it, 27.35, and then we got 27.24 half on the overnight low. R4A 27.62, R3 27.54, R2 27.45.75, R1 27.38 half. The pivot point for the day, 27.30 quarter. S1 27.23, S2 27.14.75, S3 27.07 half, and S4A 2700. For our 10-day range analysis, the previous day 15.5 points. The median has been 21, so getting tighter and tighter. The entire session 21.5 versus a 32.5 median. 12 points in the overnight session, 6.75 in the first hour. Super tight yesterday. We noticed that off the open it was a really tight gap up, really small range, and then we ended up filling that gap. But we have range contraction on the prior day, with the index strength coming handedly out of the Nasdaq, a full percentage point. The Russell was basically unchanged. That was up 0.5%, S&P 0.36%. Over a 5-day period, the Nasdaq leads up 5.5%, really outperforming the other markets, which are still, up about 3%, a little more. So the Nasdaq's been the leader here. You've had a lot of earnings: Amazon, Google, Apple, I think Microsoft as well. So that's the reason the Nasdaq's really been outperforming here. So let's take a look at these markets, talk about a couple of situations. Let me know how the volume's coming through here, just so I'm aware of if I'm lagging or not. But I'm going to start off with oil. We do have that oil inventory report here today, and we have broken down and through our third test of our 50% retracement long. So Just give this a moment to load. There we are. The halfway back long from the low of last week on Monday to what was at the time the high of Thursday traded its 50% retracement at 53.35. Friday, we had a second test Monday. And then yesterday, or in the overnight session, we traded that 61.8 and defended it. So technically with the defense of this 61.8, bulls are still in control. Now there's been selling pressure since the highs of Monday. We traded up to 55.75. We're down over 2 points off that level. But if we continue to hold this 53.35 here, the upside profit target is 56.34. 56.34. Now, if we break below the support levels that I have, are going to be 52.45 area, which is a same anchor new high extension, 38% retracement, and then below that is 51.39, which is the same anchor new high, 50% retracement. And let me show you what that looks like. So that is from the high of December 26th to high. This traded once to profit target. Okay, same anchor new high, bounced off that 38 going back to that Monday. And then I'm just drawing it to that new high here. That's where I'm getting those levels. That's where I'm getting those levels. All right, so on a breakdown, we have no support till 52.45. And then if we hold this, I just marked up the full halfway back short here. Just want to be aware of that level. And that's right around, let me get the exact level for you guys. That level is 54.31. Okay, and then you obviously have this resistance level right here. And Perry said before, during his morning trade plan, oil needs to get above 53.30 to really start confirming trend back to the upside. You can see the selling pressure here. Yesterday we held a 50% retracement short. Okay, we traded that 61 that hit profit targets. That swing high to low is what needs to break for long. So if longs can get above, I'm gonna say 53.95, then the halfway back long from this low will be valid. But right now, going into oil inventory report, if 53.75 holds, we're going to be targeting, which lines up actually with our support down at those 52.41s. And if we break, we'll probably at least get a run to the halfway back short at 54.30 at that point in time. Look for the next move. So because it's a third test of the long and we have a test for short, I think it's a crapshoot for oil. I'm more interested in the move after the report rather than the move going into the report. So if we complete the short, look for a support. If we break the short, look for a long. So that's what I feel is the best position for oil. Let's move on to the NASDAQ. The NASDAQ, strongest market over the last 5 days, right? Strongest market yesterday, full percentage point move. The next level that the NASDAQ should reach is 70.86, and that is the negative 61.8% touch from the pullbacks that occurred on the 22nd, the 23rd, and the 29th of January. It's a negative 61.8% profit target. Now, if we do break down below, say, the overnight low, below the swing low of yesterday, the next support level would come from the extension from the 18th to high. Okay, the extension from the 18th to high. And that 38% retracement would be 69.55 quarter. The 50% retracement would be 69.31. Now, holding us and preventing us from getting down to those support levels is actually the extension to extension sequence. So the extension from the 18th to high, actually there was an extension from 67.59 to high, held and completed. So the extension from Thursday's high to high traded at 69.85 and has an upside target of 70.49. So in the morning, if we break above, and we're really close, this is basically a dive trade long, we're really close to taking out yesterday's highs right at the open. In the first hour, this is an extremely bullish case. In the first hour, if we complete the negative 23% profit target, I think it's likely that we hit the negative 61 here today. If we complete 70.48 within the first hour, I think it's likely we complete that negative 61 today. If we break below the overnight low here aggressively, you can then maybe look for us to get down to those lower levels of support, which I just want to mark up so you guys have them on your chart. Okay, so if we have sellers off the open and break through those overnight lows, the move would be to 69.55. If buyers step in, our first target is 70.49. 70.49. And you can see the 38% retracement here at 69.96 had a bid in the overnight session. Moving on to the Dow, it's a very similar situation. You have the extension on the higher time frame. If we were to break down, that I would pay attention to from the high of the 20th to high, the 38% retracement is 25,131 and the 50% retracement is 25,056. So I'm going to mark up that level first at the 38.2 and then at the 50. Preventing us and holding us above from trading those hourly pullbacks is the extension from the high of Wednesday to high. Yesterday, we traded the 38% retracement. We never got to the 50. The 50 was 25,220. 25,225 was the 38% retracement. That is the low here of the overnight session. If we can break through the highs of yesterday, we will begin moving up to our targets of 25,443. 25,443. On the higher time frame, here in the Dow, I have to find the anchor, let's see. There is a negative 61.8% profit target up at 25,611. So that is your major higher time frame, negative 61, that would potentially create like a larger reversal. Okay, so 25,611 is that level. So I'm going to mark that up with an alert. We want to be aware of that. Let's take a look where that lines up with the daily chart. Just want to see like what that area would look like the last time we traded it. Come on. Here we are. All right, that would be, you know, back up really the first break bar going to December 4th. We're going to be in the middle of that. So that is really when it began breaking down, was December 4th. So those targets line up with that area of breaking down. And you can just look at this daily chart, guys. It's been very bullish since we reversed. We've had only two days since the lows of Christmas to the 26th. Only 2 days in a row have we been negative. Okay, like, or one time we were negative 2 days in a row, I should say. All of these other days, it was just blip, bid, blip, bid, blip, bid. Okay, so obviously this market is extremely bullish. Moving on to gold, very interesting situation. Gold's extension, which we've been watching this level all week, and it's every morning I've come in. I think this week so far we've been close to these support levels. Okay, and that is 1315.8. So far here today, this is the most accurate reaction off that 1315.8 support level. But what does that mean? So first test was Monday. We dipped, but we got a bid. Then in the overnight session, got another bid on Tuesday. But what's a little different about this time we've bid here is we barely dipped. Okay, we barely dipped. what continues to get sold into, and we do want to respect as resistance, is the halfway back short from the high of Friday. For whatever reason, that's what people are selling into. That level is 1320. If we can break above 1323 today, tomorrow, Friday, then we can start looking for these higher time frame targets to complete at 1338. The dollar would need to break down on the back of that, but until that happens, there is going to be a range between 1320 half to 1315. It's about 5 points in gold, and it is a range. Do not anticipate a breakout of the range until it happens. Trade the range until the range breaks. Now, if the range breaks to the downside, there's a lot of room below. In my opinion, there's a lot of room below. If we start getting really, I would say below, just below, Monday's low, there will be, I have no support for 14 points. So if we hold these 1320 halves, get back below 1315, and it's looking weak, I have no support for 14 points. I would really look to heavily short into that. But obviously that would have to set up. That's something to keep an eye out for. Moving on to the S&P 500. The extension. This is a little interesting. This is one of those things that you really gotta know fibs to be able to see this. So there was an extension that began on the 18th, too high. That blew out of profit targets yesterday. That high to high held on the back of Google earnings, and I don't know what else reported, but yesterday actually going into, and I totally forgot about this. This is I had a long night Monday. My girlfriend got super sick, so I barely slept, so I was not on top of my game yesterday. The high of 2708 to high in the morning, that was the sequence we were holding. The negative 61 was 27.35.75. We traded that, and that was basically the highs of the day. We ended up running into the same anchor new high at a 50% retracement, which was 27.22 half, and having a perfectly technical reaction that bid all the way back to the high by the end of the day. In the overnight session, we retested this level now, 27.26. That's the 38% retracement. These are the levels you'd want to see hold for longs. Okay, I would even say this halfway back long, and I'll just do this with the S&P, to bid off of this 50% would be pretty important. If we start breaking below 27, call it 27.27, I would think that this market does not have enough strength to continue up from here. And if the market does not have enough strength to continue up from here, I would then look for it to trade back into the original extension from the 18th of January to high, which leads us down into 27.14.75, and then if that does not hold, 27.07.75. So if we do not continue bids here today and do break these extensions in these indexes, be aware that we are most likely trading to those lower levels of support. Now, if we hold and buyers continue to come into the market, your upside profit target is 27.43.75 on a negative 23% profit target. The negative 61 would be all the way up at 27.54, which lines up with R3. So obviously that would be a very aggressive move to the upside. On top of that, guys, continue to be aware of the higher time frame, negative 61, that's still in play, that I think we're moving up towards, and that exists at 27.73. 27.73 is a major resistance level for me, and it'll be interesting to see what the market does when we get there, but I do believe that that is where the market is looking to go. So those are my support levels here for the S&P 500. Moving on to the Russell, which has so far had the best reaction off of its extension. Its extension is a higher time frame extension. It's from going back to all of the other markets which have not traded the high to high from the 18th. The Russell traded. The Russell from the 18th to high traded its 38% retracement at 1511.9 and caught a bid. That means its upside target is currently 1534. So the Russell had that higher time frame extension that I pointed out, all of those lower levels in the Russell, or I'm sorry, all of the lower levels in the other markets that we would trade down into if we broke down. The Russell traded that sequence yesterday. So the 50% does remain untested, 1507.7. That'd be something to look at. But really, if the Russell broke down and the rest of the markets broke down, I would, potentially look at the full halfway back long from Monday, the 28th to high. I'm going to mark that level up here, and you can see that's this right here. I'm going to bring this up here. So on a breakdown here, below the lows of yesterday, we would first have 1507, and then below 1507, we'd get a whole new wave of selling pressure in the Russell. All right. So that's what I got here going into the morning for all of these markets, guys. I will share my levels with all of you who are part of Major League Trading in the MLT Discord channel under the Trade Plan Library. If you enjoyed this content, give this video a thumbs up. Feel free to leave your comments below. And if you want to learn how I use my Fibonacci sequences or work with our partners on getting a funded futures account, check out the MLT Pro Trader course. And everybody have a fantastic day. I'll catch you guys in the Major League Trading MLT Power Hour. Take care.